This is Justin on Wednesday, January 11th, 2023. Take a look at SPX. Have been a couple days I looked at SPX on the video here. So we're going to zoom in to the 3-minute. A lot of things are similar to SPY, but I've got some other levels in here. So if we go into the 3-minute, you can see what I talked about on Tuesday is we had some really nice levels we pulled back into. I've got lines in here that go back a little while. And so we're still in that uptrend. We did the S-curve thing, and then today was a bullish retest gap, and we just continued on up. So you're going to look for a place where it's going to pull back and give you maybe an S-curve on a shorter term. You know, we had the bigger S-curve we talked about on SPY looking like this, and you want to be buying in the dip. So, okay, if we're going to continue up, well, let's zoom in to where could you actually be buying those dips. What's that going to look like? Well, it's going to look like that. So here's the dip. You can buy that blindly. It's dipping. It should go bullish. It does go bullish. So have enough room on your stop, on the range for your stop, that you're going to set up the trade so that you are, just giving enough room for that to pull back further. And so one way to do that is to look for good candles or wait. Waiting is a way to trade. It's not as popular. People just want to be in things. I like being in trades. But if you had waited a little bit, we've got a bear candle here, bear candle here, bear candle here, all these closing above the 10. And then here's the best one. And it's a hammer. And you could go bullish above that and a stop aggressively, I would say below this candle here. Probably just because it's the first one that actually has its full body range above the 10. I wouldn't go right below that. It's more likely you could get a bigger pullback, and it's going to reverse or dip or something. Not reverse, but dip a little bit more. And I mean, you could, if you just want to be like a gunslinger. I think that's the phrase. Someone said that for another trade I was talking about earlier today, something else. But so this is the setup. If you're getting in bullish here and your stop is a little more conservative, well, not even conservative. I mean, conservative would be way down here. That's too far away. So kind of split the difference, right? Nice bull candle. We've been going sideways through here for a while. Yeah, that's a good setup, And so the best part of this is you can set up that, and we can look at the option to do it, but it's what, $6 here on SPX. It's pretty small. On SPY, it's even smaller. But anyway, it just keeps going. We just keep on going up. We do have some more opportunities to buy hammer kind of candles later in the day, some lower wicks. Now, why are we pulling back to this level? What's going on here? Oh, ran into some resistance. And now it's acting as new support. So, I mean, this is just technical analysis. Everything's working here. If I zoom back out, you can see that we had some resistance. I'm just going to hold the cursor here. Here's some of the highs that we ran into yesterday, right? Or 2 days ago, sorry, Monday. And so it makes sense. We're going to slow down into those ranges. There's a lot more choppiness. We start to reverse. Some of that is going to be people buying or selling here or buying puts here, pushing it down, something like that. We're going to chop around a little more, but we're still trending higher. Here's a bigger one. We made a new high, ran up with a bunch of bull candles. Let me zoom back in. So 6 bull candles in a row, got a little bit of a dip. I don't know if there's some announcement, something. It doesn't look like it. It's just kind of a pullback. But this is why you want to have a little bit of room, a little bit of range in your candles, because here's a really nice place to buy, but it actually moved just below that and then bounced. So you don't want your stop right up against the low, to the penny. Give it a little bit of room, understand how the ebbs and the flows of this work. So let's go look at the first one that I drew here, being the 1036 candle. Let's go look at that on the 3950 call that expired today, because this was a really great setup. You have the same kind of hammer candle here at 1036. The range in this candle is less than $1. You can get this set up buying with a stop limit of 4.15, maybe 4.2. Let's just say 4.2. Give it a little bit of room there so you're not just whipped in or something. And then your stop can be $1 lower at 3.2. And we actually never got below this candle all day. Even this candle here, the other one I talked about later, the 106 Central Time candle, that one came down to a low of 3.66. So you actually could have done the same trade getting in at 4.2 later in the day, based on this candle, which was on SPX, a bear candle closing above the 10. Now it's not closing above the 10 here in the option. That's okay. The option is going to move a little differently. But if you're just looking for a 1 hour move or a 1.2 hour move, I mean, you can look for more than that on SPY or on SPX. Sorry, I've been talking so much about SPY the last number of days. You can have those bigger moves on SPX with the options that are a little further away. So this is the 39.50 strike. And at that time of the day, that's out of the money by about 10 bucks. That's it. It's nearly at the money. The 39.40 strike would actually be at the money. So we're, 39.45, 39.50. We're 2 strikes away. It hasn't gotten to that price yet today, but it's possible that we get in there. We end up closing quite a bit above it. And so that's just what I want to walk through here. It's like, okay, if you're going to set that up with this option, you're getting in at 4.2 and a stop at 3.2. And then here's previous levels that we actually moved into. It ran up to those. So you're out at maybe 7.2 from 4.2. So that's a 3R gain. If you set it up again to buy the 4.2 level, or you just were looking for something to buy, okay, maybe you're into this one at 5. Your stop's down at 4. Or now you get some house money. Maybe you take 2 of these R's and you're like, okay, I'm going to buy again at 5 and a stop down at 3 and look to hold longer. And maybe, so you still got 1 hour profit. You're going to reinvest 2R. So you got $100 that you turn into 300. You're going to take 200 of that as your new R for the day or for the rest of the day. And you're going to put that in right here. So this now represents my new risk. All right. So I'm going to say I'm going to risk 2R here. All right. And now I'm going to hold on to this till later in the day. And when it's up here, that's probably a good time to sell, because it took out, from here to here, it took out that high, and then it took out another high. It's like, oh man, this thing's still going. I could still make it out with a little bit of a gain. I'm tightening up my stop. Okay, we're running. We got a bunch of bull candles in a row. We're making a new high. I could get from 5 up to maybe 12. So I could get 7 out of that. And if you do the calculation, 7 over 2, it's 3.5. So I actually made 3.5 times my money on that one. But you don't want to hold through a pullback like this. It hurts. It's no fun. You start calling yourself names or saying like, why did I do this? I'm so dumb. I've been through that. Don't hold through one of those. If you've got the gain, it's moving directionally. It's getting in the last hour. Unless you've gone back and figured out, okay, how do you hold through all this and work through that mentally, psychologically? What I prefer, the better way to go about it is get into another, take something and then go to a different option, a different call that's a little further out. And so I'm going to delete all this, go back, pause the video, rewatch stuff. But at this point, when we're pulling back here, this is what's great about the technical analysis. All right, I'm going to switch back to the 3-minute. We made this high right here, right? That bear candle was strong, okay? We pushed right on through it here, retested that level, pushed up again, retested that level. Don't look at the 10 EMA right now. We just retested that level twice, okay? I'm trying to draw a straight line. There we go. The first retest, we bounced. Maybe we're still in the trade from this candle. Great. Okay, we're bouncing. Let's take some profit up here, make a new high. What if we bounce again? We're at 39.55. What if we bounce again? Let's go look at the 39.60, even 39.65. Well, probably 39.60 because we've been in the money for that already. 39.65 is pushing it. Okay. No guarantee it's going to get that high. No guarantee it's actually going to get to 39.60, but let's just look at the 39.60 price. So this one came back to around $6 on that candle where we expect it to retest. Let's look at 39.60. I'm going to zoom in on this option and see this one came down to under $1. Came down, the low is actually 0.45. So you can get into 2 of these contracts if you got filled at 0.5 with $100 risk. Or you take some of that 7R gain, and you go to this next option. It's 2 strikes away, 2 strikes further away, but it's been in the money. So we were in the money on the strike at this point here. and then we came all the way back. We're out of the money, and then you can get a skyrocket trade right at the end of the day. These are the ones I love. I've caught a few of these, but it's the setup of what's been going on during the day. Where are these levels? You're not going to see the levels show up the same way in the option. The out of the money option is trying to go to zero. This is the option that has the potential to go to zero in the last hour or even the last half hour. It's had a big bull move. It's pulling back. The market makers, the Greeks, they're trying to pull all the premium out of that. Then all of a sudden we get to a level that we held before at this price. And this is another thing that I've watched for. I don't have any data to really support this, but something I've observed, if we get to a level that's about $1 with that low or with a price that's come there and we bounce from there, look for it to come back below $1 to bounce in the last little bit of the day. It does not work all the time, doesn't even work half the time, doesn't work even probably a quarter of the time. But the times it works, it can do this. And that is what I've observed. I need to go back and figure out more. How often does that happen? How do you see that forming throughout the day to give you the potential to do that, and turn those opportunities into some rules, like, okay, don't get into it on this kind of a day, do get into it on this kind of a day, that kind of thing. I think today was a good setup. We had a continuation move. Things are trending bullish. If we get a bunch of selling, if we push through this level, we retest. We just did the same thing again, just on a fractal level. Let me draw it. Let me draw it a certain way, and then I'll see if I can. I'm going to draw a line here like this, and I'm going to draw a line here like this, okay? And then I'm going to highlight a couple things. We had 2 points of resistance, 2 points of resistance, okay? Now we've got 2 points of bouncing or support, 2 points of bouncing or support. So what we just did, where do we draw this now? I need to change the color. And I want to draw a triangle, but I don't have, it's not built in to draw a triangle. Okay, I'm just going to kind of draw it like this. What we did is we bounced off, or we hit resistance and rolled back down, pushed through it, hit resistance, rolled back down, pushed through it. And then that old resistance became new support and helped, frame this so that the potential was there. We just did the same thing. We repeated what was done earlier in the day. Same day, same kind of move. You see that? That's just fractal. It's just repeating. At a different level, it's compressed a little bit more towards the end of the day. You actually have a bigger move here at the end of the day than you did here, or even here. Actually, the better one would have been after the second. So here's the comparison. Let me change the arrows. So the bounce that we got here in red is actually bigger bounce here in red. I'm sorry, I said it backwards. This number 2 is bigger than the number 1. Probably because it had more selling over more time than this just had a quick pullback here. Probably. But again, I'm just saying, hey, look, these things are really similar during the day. I'm going to grab, you know what? I'm just going to take a screenshot of this so I can use that as the thumbnail for this video, because that really just summarizes like what happened during the day. So let me do that. Okay, I will save that in a bit. And then let me get the annotations back on. So if this is making sense, oops, let me get rid of it. If this is making sense, you can see the framework. Now it's harder to see this forming throughout the day. It's much easier. Hindsight's 2020, right? It's easy to see this now, but what can you be looking for during the day to set this kind of thing up? And that's where I'm going to come back to looking for bear candle closing above the 10, that 10 EMA setup, looking for a hammer to buy. What kind of levels constitute, hey, here's a hammer, here's some lower wicks, here's some interaction with the previous level. What does that end up meaning? So here's your previous level. We bounced off of that a couple of times here. I just drew 2, but we bounced off of it again here. This was kind of later in the day. even though it's doing this, it's giving you the potential. We've continued to make higher lows from this point. We've continued to make higher lows all day. What if this is a higher low? I didn't know it was going to stop here, other than it stopped here before at a previous resistance, and then we got a bounce at, new support. And what if we do that again, because we did it again here? What if? And then get into that trade with a be able to mitigate your risk, or do absolute zero. So if it goes to zero, that option goes to zero by the end of the day. You don't have to worry about it. You've just lost that full R, or you take some of the house money you made that day. You have the opposite thing happening on the so here's another thing to look at. Look at the volume later in the day. Like, these are still a little more expensive because it's dollars worth. Here's the 3950 put. Like, there are some volume spikes in here, and all this thing is doing is going down. It's just going down, 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 down. You can look at the reverse thing happening here. Where are we actually breaking support? So here, this level here, where are we breaking support? Where are we testing it? Here we've got some resistance here, So if you kind of, like, it did jog down a little bit, but you can see, okay, we couldn't even push back up to that level. Or here, we couldn't even push back up to that previous level from earlier. This is not looking good. All right, here's your new support here. Okay, we broke down that support. Can we push back up into it? No, we can't. Oh, look, we did. Push right back into that same level, and then it rolled back down. Don't be into this bullish. I'm sorry, don't be buying this put looking for that to bounce. It's showing you it's rolling over. So it's just the flip of everything we just talked through on the bull side with the call. This is the flip. It's showing you it's rolling down. It's holding the new resistance. Old support, new resistance. It's holding that on the way down. When the put and the call and the ticker, in this case, it's not a stock, but when those are all having the same kind of confluence, and this is where it's easier to see it, I'm going to zoom out. And on the top right, I've got 3 minute of SPX. On the left, bottom left, I've got 3960 call now. I can go back to the 3950 if that, that'll match up with what we're just kind of tracking with. When we're seeing these levels playing out, you're seeing this confluence where you have here, this high wave candle right here. So I'm going to highlight it. So this one here, and this one here, and then this one here. When those are all having this confluence where it's like, okay, we're running into a previous level. We've got, it's a little bit above the support here, but it's right on what we did through here and back to the previous hammer there. And you're seeing that come into a previous level. That's the confluence. Like, go directionally there. Expect that to move in the way that it's been moving for the day, that trend. And I think you'll see good results. Go back, figure it out, look at more of the options, look at the 3955 call and put, and see how that moves. I think you're gonna have less volume than the 3950. I just like the round numbers: 0, 0, 25, 50, 75. In this case, just going 10 points, $10 out to 3960 was a good idea, because that's how high we got to. That was in the money. That's going to give me a higher likelihood of, we should be able to get back to that price. In this case, we got back to it and then we skyrocketed. We continued to move on through. And that was a really great gain if you had an opportunity to trade that one. I didn't trade it today. I didn't get into any options today, but those were some of the setups. Hindsight, seeing what you could have done. I was tied up with a number of different meetings today. I was in a meeting from 1 to about 1 o'clock to about 2:40. And then I was in the car for the close. It's like, I missed it. I saw this pulling back. I'm like, I think that's going to bounce. And I glanced at the chart, and it's like, there's no way I can set this up. And I was looking at actually the 3965, because it's like, I can buy this really inexpensively. I can do an absolute zero. I can buy this for $25, $50. And then it was just like, am I going to be able to manage this right into the 3 o'clock close? No, I wouldn't. So I don't want to set up something where it's like, okay, it's either, make something, set a target that's not too aggressive, or, pull over, see if I can manage the trade. It's like, no, I'm just going to not trade this one. But those are the opportunities that came in today, and wanted to share my thoughts on that on this video. So I know this was a deeper dive into SPX and how these things can move directionally. I love the last few minutes of the day when you can get these spikes in the option moves. Do not trade this with real money unless you are absolutely certain you can lose that full amount that you're risking. And so I recommend absolute zero if you're going to do it. So say take $50 on this last option, take 25, $50, expect that it's a $50 lesson. You're not going to make money in that. And then have multiple ways to trade that in your broker. Have it on your phone, have it on a computer, have it on a second computer, be logged into all of it in case one goes down. Especially get on your phone, get familiar with that process, because you don't want to hold this into the close. You don't want to call from your broker after the close to say, hey, you owe us this because it's a margin call. You didn't have the money to do that. If you're doing it with cash option, you can still get it closing in the money. In this case, this was a close in the money. You need to be out of that call. You don't want to have that call from your broker. Get out of the call. Close the position, whatever you have to do. Get filled at a market order to get out immediately. So don't hold it in the last minute. I'll hold in the last 2 minutes. And then at 2:58, I'm like, okay, how am I getting out of this? And what do I need to do to get out of that? I'm not going to wait till the last minute. And that's even, I've had to work through that myself. Just not freaking out that I'm still in a trade that's about to expire, but I'm holding on for that last move. And I've been holding on to those, and it'll expire, or it'll move down to zero, be out of the money. I've held on to those too. It's like, oh, I missed that spike up, like this upper wick. I missed that, and then it goes out of the money and it's zero. So I've been in those kinds of trades too. It's not fun because it's like you got to wait till the next day to figure out how to actually execute that better. So like I said, there's a deeper dive into how this stuff moves. This is more of the stuff that I was doing a while back. We were looking at Amazon when it was around $3,000 per share. That's one thing I really enjoy about SPX with the larger price tag here, and the daily expiring options. But make sure you understand that. I'm telling myself too, make sure I understand this, how this stuff moves, look for these patterns, look for this fractal setup. And today was just a great day for it. And then not to mention, you got the RSI and the low down here at the RSI. It's like, well, that's oversold, so maybe it's going to get bought. Like a number of things saying, hey, there's an opportunity here. Didn't know it was going to run up straight up in the last 20 minutes of the day, but that's what it ended up doing. And that's when I was absolutely not available to trade it today. So sometimes it works out that way. It's a great lesson for me. Just be like, okay, I'm going to look for this. These are the things. This will be one that I can print up, and I can highlight these things. Pay attention to that thumbnail, take a screenshot. Make sure you understand what is going on during the day to make those moves. So sorry for this longer video. I hope it's not too much of a rant, but I think there was just some great opportunities, some great candles, some really key things to take away from how this moved. And I didn't really look at all of that for SPY. So if you want to dig into how SPY moved and see some of the same things, I think there's some great opportunity to review that for your own analysis. So hope this helps. This is Justin. Thanks.